Full Moon Tuesday, Warriors. Hope everyone had a nice long weekend, recharged their battery. King Dollar's flying again. But I just want you to look at that picture. Full moon. We have Moon Man Norm Winsky with us today. And when I look at this moon, I predict the dollar will peak within the next 24 hours between today and tomorrow. And almost makes me think about this song when I look at this full moon. Hey there, little Miss Riding Hood, you sure are looking good. You're everything that a big bad wolf would want. Ow! Who remembers that song? No, Moon River, man. All right. Markets.
I think Wolverine remembers that song.
Oh, who does? Herbert Hoover?
No,
1970s, man. How old were you?
Good. 70s? Which year of the 70s, so I can tell you?
Oh, I don't know. Mid.
I was -5.
Oh, man. I don't know how the world was able to exist without you. I can only imagine, though. How are you today, buddy? I just want to show this WTI call by Andre Cardoso.
Yeah, it was a very bad call, just for 4.5%.
Yeah, is that one of the biggest pips that we've had? Have we ever had anything like 5-6%?
We
have to be a crypto.
Yeah, exactly. And you don't get these kind of calls for FX. Obviously, it's extremely hard, but commodities can produce such a performance. But that was an amazing top calling from Andre. There's no question about it.
Yeah, great job, job, Andre. I know you're listening. All right,
for those that are listening in, I think they remember that more or less, all of us in the team from different perspectives, each other, were looking for a top in crude at current levels, which shows that we might be approaching the markets from a different lens. But all types of analysis are valid as long as you know how to execute them, right?
Yeah, almost a 10% move came faster than most thought it would to get to the first target in 3 days.
It's what they say, up with the escalator, down with the elevator, right?
Yeah, so let's talk about what might, and I don't think it's going to come down too many floors, but let's look at the dollar here, Steve. So I think we're in the zone price-wise, sentiment-wise. I know a lot of people have 95 targets in the Dixie, and it's a 5 drive to a top pattern. Ever hear that one? 1, 2, 3, 4, 5. So actually,
if you remember, I was writing that in the chat room today. If you remember, when we were first talking about the possibility of a dollar rebound, you were saying that you had a lot of guests that were looking for a rebound towards 94 to 94.50. You remember that?
Yeah.
And I remember telling you in more than one occasions that if dollar, or when dollar finally gets a decent rebound, I doubt it that 94 and 94.50 is going to be enough. My target, in case we got a big rebound, was 96 to 96.50, and I insist that that's what I'm looking for.
Yeah, that's what Raksha said, 97, and that was when I had her on. She made great calls. I mean, she was bullish a dollar, looking for 97, and she was the one who had that Gann time model for the top in crude, that it was due time-wise.
Of course.
Oh, you're looking for 97. So this is what I'm thinking. This is how I think we get there. I think that we do this from in here and we pull back to here. So it'll be about 200 pips or so to 93-ish. And then next time up above 95, we get to the 97 level. So that's what I'm projecting. We get a short-term top here, shake out, the all the bears, and I don't know if the DSI is on euro or the dollar, but I'm assuming single digits. So this weekly breakout, I'm going to respect, Steve, until we close back underneath it. That's why I was talking about this weekly breakout, and that's why it's so parabolic. Sure, it could go to 97. You know what? It should go to above 104. If it's a falling wedge, there's no reason that we can't see 100% retracement on this.
From a technical perspective, and by the way, I need to mention here that Stelios is going to be with us within 10 minutes maximum, and we shouldn't lose the focus that, first of all, this is mostly now a euro move, and we all know that the DXY is like roughly 58% of consistent.
Look at this.
Of euro, and this is a euro move, right? And that's why we're going to have, first of all, a conversation with Stelios, because obviously the move is down in the euro is in a big extent a move that comes as a result of some macro factors. Italy, for those that are paying attention, and we will actually analyze that. But going back to the dollar before we do that, and afterwards, of course, we're always, as always, we're going to look into technical charts and everything else. Before we go to that, we have to mention here the following, that I personally believe that, first of all, you're right, this could, from a technical perspective, could lead to a new high, but I will tell you one thing for sure. I think that this is a bear market rally. So in the vast majority of the cases, unless some factors come in together, I think this is going to be a bear market rally. And we know that often bear market rallies or bull market sell-offs can be brutal and can be very, very challenging for traders to manage, because they catch the market off guard, and positioning is almost always wrong in these cases. But I do think that, considering everything that's happening and the state of the US economy and how they run deficits, how you guys run deficits and everything else, I think that a strong dollar is definitely going to act contradicting to what many believe. I think that a strong dollar is just going to make the economy weaker. I think that the economy currently can't handle a strong dollar, especially if that's a product of higher yields, because currently the US is running roughly 100 billion of deficit per month. Okay, so the US is currently running at the end of an expansionary phase of the economy as much deficit as Obama was running after the financial crisis of 2008, just to bring the economy back. So the question is, what's going to happen when the next recession comes? I mean, what kind of deficits will the US have to run? And what does that mean actually for the value of the dollar, right? So let me reiterate here, I think that this is a bear market rally, and I do expect it to fail sooner rather than later.
All right, look, something a little more shorter term that might be actionable. As strong as the dollar is, Steve, normally all the way up in the dollar, the Mexican peso was leading it. It was one of them getting really, weak. And now the dollar's at new highs. It almost looks like, this could have been A, and we're getting some type of ABC here. And if the dollar comes off and this can't make new highs with the dollar rallying, say we pause in here, this could set up a pretty good short. So, short the weakness and instead of trying to bottom pick the weakness, sell something that's not making a new high, gives you an edge, and it's more forgiving if you're early. You sell the strength, it buries you. You sell the weakness, you might have a drawdown, but normally not as severe. You know what I mean?
Personally, I think that this move higher in the USD MXN is very likely part of a correction to the very strong move we saw from the 22 highs. And technically speaking, I think that the market still owes us at least one more leg lower. So in all honesty, I do not, I'm not looking, or I'm not advocating that somebody should be trying to sell USDMXN right here, right now. But I can tell you one thing for sure, I would not be looking into buying it. Especially, and Blake has mentioned that several times, I remember, especially if we do get a NAFTA deal, there is a very big chance that we're going to see you know, a major rally from the MXN. So in essence, a move lower from the USD MXN. And people should be aware of that, meaning, you know, no matter what you do, keep in mind and be careful. You need to always consider, you know, your risk here. And as I said, I do think that the next big move for the USD MXN is lower. Now, does that mean that it's going to happen from, you know, right here, right now? No, it doesn't. But I would be more interested in being a seller sooner rather than later than a buyer. By the way, Dale, I think your microphone is a little bit too close, so we can hear you breathing.
Oh, I was looking at the moon.
Either that, or he's really excited about what you're saying, Steve.
Yeah.
Which usually is a combination of both.
Oh, you heard me snoring. I am an insomniac. Can I call you any night and just talk markets with you?
Any night. I'm at your disposal.
Huh?
Steve?
Yes, Telio?
Sorry, I didn't mean to interrupt there. I was just asking, I wanted to ask, because I missed the first 10 minutes, if you talked about Italy. I'm sure you did, but I don't know.
No, I didn't. I didn't because I said that. Exactly. I said that I'm expecting you so we can have the discussion about
Good.
Italy, because perhaps there are a lot of people that have read, obviously, that there is something happening in Italy that has to do with the political situation, but there are a lot of people that might not be aware of the specifics. Yes. Because the point here is that the situation with Italy, first of all, is a complicated one. Second of all, personally, Stelio, I don't know about you, but I don't see some kind of a resolution coming soon. I mean, this is now, we've entered, in my opinion, a process that can take time to get resolved, and it's everything but certain that you know, it's gonna be quite complex, and I think that it has a high chance of producing a lot more turmoil than we've seen so far.
Yes, I agree 100%. And just for the people who are following and who are not aware of all the details, what's happened is that the Italian government, the coalition government that was formed by the Five Star Movement and the Lega Nord, the far right party.
Hold on, Stel.
Yes.
Oh, Steve's taking me off, taking my screen off. Ziggy, I was talking about the moon earlier, you know, and I'd even sang Little Red Riding Hood, but I know you know a lot about Italy, but is this stuff coming from your Sicilian contacts?
I don't.
Yeah, come on, man.
I don't have any. No, I mean, I'm no specialist in you know, Italian politics, but I've read the you know, I've been following it. But
I thought you were in Costa Nostra. All right.
Not, unfortunately, not.
All right, guys.
So this,
sorry.
No problem. So this coalition government, they proposed a cabinet, and the president, Mattarella, basically accepted everything except the nomination for finance minister, who was a guy, Paolo Savona, who's quite well known for being a Eurosceptic. And so what he did basically was he rejected him. And so at the moment, we're in a position where we're waiting to see if there's going to be another election soon, which is probably the case, because we now have an interim PM who comes from the IMF.
So let's add here another interim PM.
Another, right? Yes. We had Monti before and all that. So you know, it's. You know, I've been talking a lot about Italy with friends and people in the chat room, and the bottom line for me is the Italians voted to make a change. There's no doubt about it, because the traditional parties got buried. So they vote to make a change. Here come the two parties to form a coalition, and then they want to make a change. Obviously, it's a bit controversial, this guy Savona, but still, they're trying to make a change. The president rejects it. So now we're going to have probably another election soon. What's going to happen? Well, I personally think that the Italians are going to get probably even more polarized. So, we saw polls yesterday, I think. Yes.
I think there are also scenarios that in the new election, the Five-Star Movement and the Lega Nord might decide to run together.
Run together, yes.
Yeah. Yes. Which, if that ends up being the case, there is a huge chance, especially from first of all, there's a huge chance that this is going to end up being a coalition that is more or less indirectly going to be a referendum. It's going to act like a referendum for the euro and eurozone in general. And there is a lot of chance that this way they're also going to attract voters from other parties that they just want to make a point, object, or whatever, in which case there is a good chance that they're going to get a big majority, right?
Yes, that's what I was about to say. We had this poll yesterday, which shows Five-Star and Lega Nord together getting about 48% of the vote now. So
which is insane.
They're going to get polarized. They don't need Silvio anymore. So they're going to get polarized. They're going to attract people from other parties, like you very well said, you correctly said. And it's likely that they're going to get a majority. So this whole thing that's happening now, and the president, refusing Savona and doing that, it could turn out that it has actually a negative effect overall. You don't know. And the funny thing is, going into the previous election, and as Five-Star Movement and the Lega Nord, they formed the coalition, they were actually not talking about leaving the euro or doing anything like that in their plans. They had become much more softer over the weeks preceding the elections. But now, with this thing happening, going into new elections, they are free to do whatever they want, and they will have, possibly a majority. So they are in a much stronger position now than they were a couple of days ago, in my opinion. So
yeah, I totally agree with you. And this is a very dangerous, very, very dangerous path that can lead to completely unexpected results. And in all honesty, we all know that Italy is it's the third strongest economy in the eurozone. It also has a 2.3 trillion pile of debt, and we can definitely understand here that, first of all, there is the sovereign danger, which is, simply speaking, and completely separating it from the eurozone condition. If these guys that more or less, we all know that they've run on a populist agenda, if they decide to ignore the responsive fiscal policies, they have a huge chance to make Italy implode, and that's going to be a very big catalyst, perhaps even for a global recession, right?
Yeah.
And second of all, definitely with Italy being in danger of leaving the eurozone or whatever, if something like that manifests, or even if we go down that road and jitters, we start seeing jitters, as you understand, that's going to affect weaker economies as well, Greece, Portugal, Spain, etc. And we all know where that can lead. I mean, you don't need much to destabilize a global economy that is anyhow in the 9th, 10th year of an expansion, centrally supported all over the globe from banks and easy money. And we know how easy all that, as a construction, it's like, building in sand. It's very easy for a wave to come and, take it all out, right?
Yeah. And as you said, with 2.3 trillion in debt, Italy is not Greece. And the other thing we're seeing now, first it was Greece, then we had Spain with the independence, the Catalan independence. That's gone away a little bit. Greece is not fixed. We know that. although people would like to say it. We know, I live here. We know what's happening. It's not fixed. It's brewing. Now we have Italy joining the party.
But Greece at least is a controllable issue. It's just 350 billion euros of debt. But Italy, this is something that that's not manageable, right?
Yeah, I mean, if the ECB I don't know what tools they can use, but any kind of resolution of the debt for me would mean a big depreciation of the euro. It cannot be any other way. So
I agree. And to combine these comments with what Martin is asking, that I was telling before that I believe that this is a bear market rally for the dollar, and now we're talking about the Italian situation and the potential complications for the Eurozone economy, European Union in general, and obviously the euro. Martin is asking, but that would mean a weak euro, right? So in essence, that contradicts somewhat the notion that this is a bear market rally for the dollar. Perhaps there's a bigger rally coming. And Martin, I was writing in the chat room, like, what was it, 1 hour, 2 hours ago, something like that, that, the only path for the dollar to sustain staying stronger for longer is through euro depreciation, and at the same time, bond yields staying in check, staying under control. So only any strength of the dollar that comes as a factor of a depreciating euro can be for longer sustainable, because definitely a dollar appreciation, because yields keep going higher. Let me remind you here that yields depict the cost. The yield is a price. It's a price for what? For buying dollars, right? Because what are U.S. treasuries? U.S. treasuries are dollars that have a coupon, in essence, and you get them back in the future, which means that it also has the element of risk in it, right? Because of course somebody can say that they're liquid, and yes, they are liquid. It's a very liquid market, but in essence, when you're buying them to supposedly to hold for some period of time. So if yields keep appreciating and the dollar keeps appreciating because of that, at the same time, that means that the US, having already a record trade balance deficit and the deficit, it will need to find even more money. So it will need to borrow even more money to keep repaying higher costs of borrowing money, right? And that is definitely in the medium to long run very, very dollar negative, very dollar negative.
And you have to ask yourself, Trump's policies so far, what he's trying to do, you would not say that they are policies that are going to shrink the deficits. If anything, it's gonna widen the deficits. So sorry.
Stelio, think about it. What did Trump promise having to do with the economy? He promised tax cuts,
yes,
right, and shrinking the government. Now, what has he delivered? He has delivered the tax cuts, meaning less revenues for the government. But has he actually shrunk government? No, he hasn't.
Not that I know.
More spending for the military, etc., etc., etc. Which means that you're giving tax cuts, but those tax cuts are not funded by making the government spend less money. So how are you funding those? Through borrowing more, right?
Yeah.
So that's the big problem there.
Yeah, and to answer, I think you were already answering Martin's question about the USD Norway, right? Is that what you were answering before?
About the dollar in general.
Yes.
Now,
well,
use NOK.
To answer Martin's question, the NOK, I am short USD NOK and underwater. I'm also short Euro NOK. That's my bigger positions. I like Norway against pretty much both the euro and the dollar, but more against the euro. And yes, it is underwater. And my stop is at because I've said this many times in the past. I trade with very low leverage. Usually, no leverage at all, or double leverage if I feel good about something. So I have relatively wide stops. So my stop in the dollar Norway is 840, which is the previous high. If that gets breached, then it means that something materially has changed. It got close. It went to like 832 at some point. If it breaches that, I'm out.
Yeah,
I still believe in this.
Definitely a major level. Level.
I still believe in this. I still think that fundamentally it should be much lower than here, but the market can be can move and can take stops, and short covering. There's a lot of dollars short covering in the past few weeks, so it can move against you, and it can remain how they say, they can remain irrational for longer than you can remain solvent. So I still believe in the trade.
We have questions about the euro, and since we're speaking about that, I want to show one chart that is very interesting here. This is the Bund, right? Let me zoom out. This is a daily chart of the Bund. If I zoom out, you can see the prolonged uptrend that we had in the Bund, and you can see the major move that we had from the bottom of this triangle to the top of the triangle within just a few days, right? Although on the other hand, keep in mind that today's candle is a huge one. Just look at this significant upper wick. I mean, this is going probably to end up being a big reversal candle, which means that once again this descending triangle is gonna hold, at least for now, right? Keep in mind that if we do see a break higher from here, first of all, that's gonna be euro negative. There is no question about it, right? I mean, bonds higher, yields lower. There's no question about it. So that's something to keep in mind. But as I said, for now, we're seeing a nice reversal from here. So it might lead to some short-term bounce for the euro as well. Now, let's have a look at the euro, because I have to say here that there is a very critical level for the euro. And let's go first to the weekly chart so you can see it here. This level is roughly the 114.50 level. Now, you can see this area. Let me mark it. You can see this area. It has produced, first of all, it was the breakout area after a long period of time that actually euro on a weekly basis had been contained by it. And once we broke above it, why not this acting as support once again? So in my opinion, 114.50, a very, very, very key area of support. And it's quite likely, given the oversold nature of the euro, at least for now. I mean, look at it. This is already 1, 2, 3, 4, 5, 6. This is a 7th consecutive week that the euro is trading lower, right? So let me be very clear here. I mean, for those that are in the chat room and for those that are following the webinar, I can tell you that, and you know that I was short. I'm still short the euro Aussie from here. I'm also short the euro yen almost from the high, and in combination between the two of them, I'm almost 1,000. At some point today, I was actually a bit over 1,000 pips in the money. So I do like euro weakness, but as I was saying in the chat room as well, this is not the place to be selling euros, right? I mean, the euro has already moved a lot in a short period of time. And obviously, this is not a place that offers a reward to risk opportunity for you to be looking to sell it. So you like to sell the euro, it is what it is. You need to wait for a rebound, because if you do it now, you are in danger of, due to some statements. We already had some statements earlier today from Italy, or to a snapback for one reason or the other, you can find yourself being out of the money very quickly. I mean, let's take the euro yen, for example. Why not euro yen? If it rebounds from here, it can go back and retest the 129 area as resistance. Euro USD, on the other hand, if this was a low, or if it finds a low in the confluence of 114.50, as I said, this is the confluence of a horizontal support resistance area. It's also the 50% fib from the 2017 low. Why not? It's as good place as any to create some kind of a reaction, right? So why not? We can even see a rebound towards the 119 area. And if you are short here, you can find yourself holding a position, having entered at the worst possible point. So I might even actually book profits today, depends on what the euro does by the end of the day. So for example, we've already seen a big candle in the bunds. Now, if the euro keeps paring back its losses and closes, nearly unchanged or whatever, I think that's going to be a good indication that some kind of a rebound might be coming, in which case, as I said, I'm going to be booking my profits and I'm going to be looking for opportunities to be short again, but from higher and probably not the Euro USD. Why not the Euro USD? I already explained, because I'm very skeptical about the dollar. My only dollar positions that I'm still holding are actually counteracting one another. So in essence, they're hedging each other. So probably I'm going to end up closing them, because I booked profits, or half profits on being short the USD NOK and being long the USD ruble, but then they both turned around. So now I'm losing in one more or less what I'm gaining in the other one. So in essence, I don't have exposure to dollar. I mean, I have as much exposure long as I have short in very equivalent currencies. So as I said, more or less, consider it that I have almost no exposure in the dollar. I prefer being short the euro against other currencies, and I prefer to stay a little bit on the side having to do with the dollar, as I've done recently. So it is what it is. Now, having to do with... Yes, Dale?
Sorry. Before you move on to the next one, just very quickly, I just want to answer another question of a comment from Martin, who said that he says, sorry guys, you're explaining macro views for short-term traders. Doesn't make much sense for day traders. Don't you agree? I actually don't agree. My views are macro views, and that's what I have always said. I'm not a people like Blake or even Steve, who are more short-term traders. My views are always more, longer time frame, lower leverage for me at least, anyway. So, and this is, and I try to back up my views with, looking at fundamentals. I obviously look at technicals as well for entry and exit. Hence my 840 stop in USD NOK, for example. But my personal views, they are my views, okay. And I'm a macro trader. I look at more long-term things. I'm not a day trader, just to make that clear.
Needless to say that I also disagree for one reason and one reason only. I'm the same person that has advocated multiple times that trading just with macroeconomics can get you slaughtered in the markets. But on the other hand, for me personally, it's extremely important to have a macro view. Why? Because this way I need this, and this way I know in which side of the market I'm supposed to be pressing my trades more or less. It's very important for me to know if the positions I take, which always are, are starting, from a technical analysis standpoint, if they are, in the side of the trend or against it. Because in one case, I might be very nimble, I might be very careful. In the other case, I might, push a lot more than I would, because I feel much more comfortable. So, in my opinion, a top-down analysis is always extremely, extremely useful.
Yeah. And just to make it clear, we're not arguing here. Obviously we appreciate every comment that you guys make. Like for example, also Nick is saying, and Ziggy, there are medium-term and macro traders on the call as well. So we try to give all our views and opinions, and obviously everybody takes it in and makes his own decisions. But we appreciate every single comment that you guys put on here, on the chat room, on the webinar, everywhere, and we always try to help as much as we can, with our experience and our knowledge.
Absolutely, yes. By the way, I was about to go to the pound yen, saying here that pound yen, for example, also showing a nice reversal so far today, but it's very early. If it actually manages to hold the 144.50 level on a daily closing basis, we might see a rebound here as well. Regardless, that doesn't change the fact that if I zoom out, you can see here that I remain very, very bearish the pound yen. Actually, I'm a little bit bummed out because when the pound yen was breaking below, for those of you that are here on the webinar, you know that I was very actively looking for an opportunity to see a breakdown here and go short, but unfortunately that happened when we were in Cyprus for the IFX Expo, so I missed my entry here. But I would gladly be short if we do see this area. I mean, the 147 or 50 be retested. I'm going to be actively looking to gain some exposure then. Now, having to do with pound USD, also pound USD breaking down below this horizontal support area earlier on, but now paring back its losses. If we do see this area hold on a daily closing basis, we might see the beginning of a rebound towards the 136 area. I'm also looking to be short this one. So, you know, I have a lot of trades that I'm actively tracking, but they're not there yet. Now, let's go to have a look at a few risk assets. One of them is the DAX. If you remember, we had been looking for a reaction from the 78.6. We said that the first target was at 12,900. Second target was 12,600. Actually, today we tagged the second target. So, you know, I think that there is a good chance that we're going to see another push to the downside towards this area, 12,450 roughly. But we are already seeing a reaction from here, and I wouldn't even rule out that we might see a continuation from these levels. So we've already seen a decent you know, pullback. Now it remains to be seen what happens from here. Same thing with the FTSE. That's what we were looking, and you know, this is one more reason why it's very important of even seeing the candlesticks. Why? Because the FTSE had already posted 8 consecutive weekly white candles, and at some point last week it was you know, pressing higher for the 9th one, and then we got a big reversal and we got a key reversal shooting star on the weekly. Very rarely you will see such a candle not producing continuation, and so far this is what we're seeing on the weekly. We're seeing continuation to a very nice reversal candle. So I do expect that the FTSE should produce some more weakness, and obviously, especially if we do see cable rebounding somewhat, that's going to help. Now, I would be looking initially for this zone a little bit lower than 7,600, and you know, lower than that I would be looking for 7,430. You know, 200 DMA is there, the 50 DMA is going to be converging there as well. It's horizontal area of support resistance. So I do think that both those indexes might have lower to go. S&P pulling back somewhat from here, but I would still be monitoring this broken descending triangles resistance, because it might actually act as a support. It remains, you know, S&P remains choppy. There is no question about it. I'm still not convinced that the next move is going to be to the downside for perhaps one more leg. I know that Grega favors that interpretation a little bit more than the interpretation that, you know, we might have already seen the end of a correction and we might be at the beginning of another push higher. I think we will know sooner rather than later. In any case, we need more confirmation of what's happening here. Another index that we were looking with Grega was the Nikkei, because the 23,000 area was more or less the last area of important resistance. That one actually did the job. We are now pulling back lower towards the 22,000 area. At the same time, as you see, we are very close to the 22,000 area, and at the same time, USD yen came very close to the 108 area. 108 area is quite an important area of support. It was acting as support in the past, then it acted a few times as resistance. It might be support once again. So, you know, it's an area I'm monitoring. I was saying some days ago that when we get a pullback for the USD yen, I want to see what kind of a nature that pullback is going to have, because that's going to help me to determine if the next move is higher or lower. So we're getting close to that point of actually understanding what kind of a pullback is that. So if we do see a big rebound from here, then I'm going to be bullish. If we see acceleration and this ends up being a wave 3 lower, then I know that we will be looking for lower prices for, quite a decent amount of days, perhaps even weeks. So I think that this week is going to be quite important in determining what's going to happen from there. Now, a couple of other currency pairs, the Aussie and the Kiwi. Aussie, we have two interpretations here. One of them is a possible pennant. We will know very soon if we do break below the 0.75 cents again. I think that we should be looking lower. And the Kiwi has a double interpretation as well. Let me show you actually on the 4-hour chart to see the double interpretation you can have on the Kiwi as well. It's this one. So Kiwi, it can either be a triangle, which we know that triangles are continuation patterns, in which case if we break below here, then we might have one more leg to the downside. On the other hand, it can also be an inverted head and shoulders formation. The good thing here is that, no matter which one it is, the inverted head and shoulders formation has a neckline that is the same as the triangle's trend line. So in essence, if we break above the triangle, you can see this as an inverted head and shoulders formation being triggered, in which case we are looking for a bigger rebound. If we do break below the triangle, then yes, it's a regular triangle and we're looking for a continuation lower. Next target is going to be the 67.80, 0.6780. So it is what it is, right? So I'm monitoring very closely on the 4-hour chart this triangle to determine what the next move for the pair is going to be. Now, crude, for the time being, I have no reason to believe this is an impulsive move in the short term. There's no question about it. So at the worst case scenario, this is the first leg lower of, a corrective move lower. I have no idea, as we never have any idea what kind of a rebound this is going to be. Is it going to be an ABC? Is it going to be a simple little flag? Is it going to be a triangle? Who knows? Nobody knows. I can tell you one thing for sure. There is definitely one more leg missing to the downside for crude. So no matter what kind of a rebound we have, we need more price action to determine that. As long as we remain below 69.40, I will be looking for an opportunity to be short once again for another move, perhaps towards the 61.8 here at 63.70. So I need more price action. Yes, Telio?
Sorry, I just looking at the chart, I was about to say, it looks like a perfect flag forming up to what, 68.5, and then the exact same distance down to the support zone.
Absolutely.
It looks perfect. Looks perfect.
Absolutely.
So yeah.
Absolutely, but I'm always very careful, and I keep reiterating here whenever we're seeing a corrective move. That corrections are completely unpredictable. It might start looking like a very nice bear flag. It might manifest to something more complex than that. So we can't know that in advance. We need more price action. As I said, there is only one thing I know with almost absolute certainty. Having to do with my trading experience, and in my mind, crude is going to push lower at least once again, right? It doesn't mean it's going to happen today. As I said, we don't know how this correction is going to evolve, but it's going to push lower once again. So I do think that crude will produce at least one more opportunity to be short. Okay, at least one more. And we're going to be actively tracking it here. And when we are confident that we're seeing the end of this corrective move, we're of course going to let you know. What about USD CAD? There is a question. Let's have a look at the USD CAD. Okay. The USD CAD, first of all, has broken above the 130 area. Let me zoom out. Actually, let's go to daily chart first. So daily chart here, USD CAD. So here's the USD CAD. This is what we were expecting from the USD CAD. This has already happened. Let's delete it. Now, USD CAD is testing once again this 130 area. It was trading above it, but it's still early in the day. So for example, if we close below the 130 area, we are still range bound. Regardless, I'm actively monitoring since a long time ago this ascending channel. And keep in mind that we also have a nice confluence of resistances here. It's the 61.8 of this move lower. It's also that high. So 131.30 is the next upside target. And a little bit higher than that is this ascending channel's resistance. I know that Grega considers that the end of the correction of the corrective move lower for the USD CAD is over in an A, B, C, right? An A, B, C. So he's looking higher. And I do see this as a possible interpretation, but I have to tell you that I remain quite skeptical, especially ahead of the NAFTA, of a possible NAFTA agreement. And if I wanted to get involved, I would probably be looking once again for opportunities to be short the closer we get to this channel than the opposite. So personally, I remain somewhat skeptical of a prolonged USD strength against the Canadian, and I would probably be looking for another move lower towards the bottom of the channel. But I don't see something actionable yet, not for my trading standards. Okay, so I need to make that clear. I gave you important levels, to watch. I gave you also a general bias that I have. But as I said, in my opinion, there are better trading opportunities out there, and I'd rather go after those. Okay. There is a question about the USD Turkish lira, and actually this is an interesting pair. Obviously, we had been warning for a long period of time that people should not be looking to fade it, and by hitting almost a 5 level, you can see that that was the right approach to market. Now, obviously, the Central Bank of Turkey decided to do something about it, so we might see a deeper pullback from there. But I have to tell you once again, fine, we might see a deeper pullback from there because the move was already parabolic in the short term. The market's jitters might go a little bit away. If we see a pullback in the dollar, it might also help USD-TRY, see some lower levels. But I would be only trading it to the short side, being extremely careful and keeping a close eye to my risk. Okay, so I am not saying that I don't see the point in trying to fade this move even further, and I think it might work actually in this occasion, but I would caution that you should be very nimble while doing so. Don't do it with high leverage, and definitely don't let this position run against you if once again you see some big move resuming to the upside. It's a very, very dangerous proposition, right? So you need to know what you're doing and how you're doing it. Now, since we have more questions about exotics, I'm still long half a position USD ruble. As I said, this is counteracting my USD NOK short, so more or less I'm going to see what I'm going to do with them, but this is still within a triangle. I think there's a good chance this is going to break the upside and extend higher once again. And we also have a question about the USD ZAR, so let's have a look at it. Here's the USD ZAR. Quite a complex formation here. It might end up being, I see some possible interpretation. One of them might be an ascending wedge, but it's too early to say something like this. In which case, we might have at least one more push to the upside, right, towards the 13 area. So I don't see this move to the upside being done yet, but as I've said multiple times, I do think that the trend is not higher, the trend is actually lower. So I think it's probably more profitable if you're looking for opportunities to be short than the opposite. Okay, I'm not saying that I would be shorting here though. Probably from higher level towards 13. That's the 50% fib as well, or a little bit higher that we have 13, 15 horizontal area of resistance. Okay. I predict that CLWTI oil will turn around on the late June OPEC meeting, and then the drop will resume bullish until then. Can be the case, Ed. Can be the case. I mean, I also see that some type of a correction is unfolding here. It might be very short term. It might last longer. We're going to know when it's about to be over. Yes, mate. The DXY. Okay, let's have a look at the DXY actually for Sunil. The DXY hit the 95 area earlier today. You can see it here. It was also that high. So 95, quite an important level. We've already seen this overthrown from this ascending wedge. for me to turn bearish in the short term and looking for a correction towards this 92.50 to 92.80 area, I would need to see today the candle more or less reversing and closing near the lows. Then we can be talking about something like that. Until then, I think we need to remain cautious. And as I said, you can see why I'm looking towards 96, the 50% fib, or even a little bit higher, 96.50, that area of support resistance, as the next target. But I don't mean that I consider it a high probability that we're going to move from here there without seeing a corrective move first. So I do think that we're going to get there, but I don't think that we're getting there directly from here. I think we need to see some type of a pullback first. Okay. Hi, I'm short Euro Kiwi at 170.83 and my target. Okay, let's have a look at the Euro Kiwi first. And let's see where your entry is. 170.83, okay, here. And your target is 163.60. Let's have a look at it. 163.60 down there. Okay, that low probably. Listen, let me be very, very specific. I think that this is what's going to happen probably here. One move, second move, third move. So I like it. I chose to be short the Euro Aussie, and I don't regret it because it moved lower. But perhaps it's the Euro Kiwis time to produce some follow through. So I like it. I like it very much, actually. I think that you're well positioned. You have a very good entry. In any case, you wouldn't want to see it back above 170, roughly. As long as we stay below there, I think, that it's looking very good.
Nice trade.
Martin, in the new chat room, because a lot of people are asking about that. First of all, I always speak about them on the webinar as well. Second of all, as I said last week, I've spent very little time in the chat room the past 2 weeks. I started being in the chat room again on Friday because I was very actively, I'm still actually, but now that Blake is away for a few days, I don't have an alternative. I'm very actively working on the chat room. But I always talk about my positions when I take them on the webinar. So worst case scenario, if you go back to the webinars, you're going to see me talking about them. If I remember right, both of those positions I actually took more or less at the time of the webinar. So when I mentioned them here, I had just entered the Euro Yen position, though I did take on the chat room now that I remember. But it's many days back. Actually, I can tell you which day it was without even going. It was that day there, so, because this is my entry here. Okay, this day actually that we broke below the 131.50 area once again. So it was the 2nd of May that I entered short the Euro Yen. But speaking about that, because we have a lot of people asking about how they can find how they can filter out what specific people are saying, etc. We are building the new chat room now. At some point within June, it's going to be ready. I don't know exactly when because we have other priorities. We need to release the new site. But by the end of June, it's going to be up. That is also going to have extra functionality, which is going to be actually searching with keywords, people, etc., which is going to make your life a lot easier. Okay. No, I do post them in the chat room the moment I do them. If I'm in the chat room, yeah. Actually, opposite, with the exception of the last 10 days, I always post them in the chat room once I'm doing them.
I think Martin is asking if you always post them on the chat room, which is the answer is no. You're not always there. So some of them you do.
90% of the times, more or less, at my entry point, yeah, I do it. As I said, the last few days have been extremely hectic for us. We were in Cyprus, and I'm also working on the new site, which hopefully is going to be released the upcoming Sunday. That's what we're attempting to do anyhow, because there are still some little pending issues, but one little pending issue here, one little pending issue there. There are a lot of things that we have to manage. So once that's done, I'm going to have once again a lot more time to be in the chat room. Okay, let's see what other questions we have. So we talked about the Euro Kiwi. Yeah, I think it's a good trade, and I do think that it might have a lot more downside. At least that's how I'm viewing it. There is no question about it. One more leg to the downside is missing. Now, let's have a look at the metals. First of all, for gold, I'm tracking this descending channel. As long as this descending channel is holding, I really can't turn bullish, right? So I like it eventually to move higher. I know that also Gregor likes it, but I'm extremely skeptical. On the other hand, silver is a lot more boring, a lot more complex. It still remains. I mean, it's moving up and down, but still within the confines of this contracting triangle. And unless it does something, there is nothing really I can advocate but just remaining patient. Copper also in a very boring range, but once again, I have to reiterate here, I like seeing copper break out to the upside, but for me, to get confirmation about that, I want to see a daily close above 317, and this area is a little bit higher from here. Until that point, I can't exclude the possibility of more choppy trading. I mean, we've been doing this since the end of last year, so it's already like 5 full months that we've been in this slightly descending. It's not exactly a channel, actually. It's like an expanding triangle. So, why not? It can resume for another like half a month, who knows? Until something happens. I think, you just have to watch it and use the BRL. Platinum. Yeah, let's have a look at platinum and then XPT USD. Okay, this is what I see in platinum. Still, nothing has changed. I mean, I do see the potential. Just look at the RSI as well here. It looks very nice. So I do see the potential of a nice breakout if this ends up being a descending wedge and we actually break above it. But we haven't broken above it yet. So I keep monitoring it. If we do break above it, I think that it can definitely extend towards 1,000, right? Until then, you need to remain patient. Now, USD BRL, I have to be very honest, I don't even know when the last time I have seen it. Probably it's not in this tab that I had opened it, but it's not that I'm not monitoring it. I don't remember where I have my technical analysis on it. I can admit to that. Okay, let's have a look at this and then we can pass it to Dale for his interview. There we go. Stalling at the 61.8. This trend line to lines only, I don't really much like it. Regardless, it seems to want to go higher. There's no question about it, in my opinion. I mean, just look at it. It came from lower. That was a very, very strong move to the upside. It seems to have formed more or less a rounded bottom, right? And it seems to be pushing higher once again. So I wouldn't be I wouldn't be selling it easily. And definitely this is the 61.8. I mean, this is what I'm seeing, that at some point we're going to see some type of a pullback, but it's more likely than not to find buyers. Towards this area, for example, you can see the 350 is an area of interest. So as long as we remain above 350, I would be very careful. I think it has a very high chance of actually moving higher. Also, if you see the daily RSI was hitting like overbought levels, 80. These are levels that confirm the direction of the trend. So I do see the possibility of an RSI diverging, even if we push to new highs from here. So I think that some type of a pullback might be due but most probably this pullback should find buyers. So I think it should move lower in the short term, but it should be moving higher once again after that. That's what I think about the USD/BRL. Is Aussie similar to Kiwi? Yes, it is. It absolutely is. Let's go down to the 4-hour chart in the Aussie so you can see in the short term that the Aussie has also two interpretations. One of them, that this is a consolidation before lower, something like this, right? And the second interpretation, that this is an inverted head and shoulders that has already broken out. We're retesting the neckline. So we either rebound from here, or if we break lower from 75 cents, there is one more leg to the downside. So you should be looking for new lows. So it's exactly the same situation as with the Kiwi. They're both on very critical areas. Yeah, Michael, that's a likely scenario, mate. That's a likely scenario. Okay. Thank you very much, Dale. Are you ready with your interview?
I am, Steve. Great job. Very good energy today. And Norm is in the house, my friend. One of his favorite days of the month. The other one's probably a new moon, but hi, Norm. I just made you the presenter on a full moon. So how are you, buddy?
Can you hear me?
Can hear you loud and clear, Moon Man.
All right. What do I do to get in and show my stuff? You know.
Well, there's a drop. You've been here before, so you hit the share screen option up there.
All right. Share screen. I see a box popped up. It should show. Oh, there you go. Show my screen. I'm going to click on that, I guess.
There you go.
And you can see my screen now.
Yeah. Let's get started.
Yes, sir.
All right, so tell me, full moon here today, buddy. You know, the thing that I cover a lot is what's happening with currencies. So be interesting if we get some type of peak in the dollar index, low in euro over the next couple of days. So what are you showing us?
I'm going to be talking about that, but do you see my screen now?
Got it.
Okay, we're going to talk about, I'm going to stick my neck guy way out here now so it can get chopped off. And I'm going to stick my...
Love it, Turkey, man.
There you go. And so here you go. One of my specialties are giving people the intraday times for little turns in the S&P. Okay, I don't know how many of you folks trade futures or not, or maybe you got a platform on your Forex platforms to trade the S&P. I'd recommend the futures. It might be a little better, but I don't know. Here you go. Here's your times. Write them down. These are all U.S. Eastern Daylight Time. That's, if you're not familiar with where that is, that's like New York time or GMT minus 4 hours, right? So here's your times. Write them down. If I'm putting my neck out on the line, I'm gonna trust you folks are gonna follow up and take maybe 5 to 10 minutes in the next 24 hours to look at these times and see if maybe the market turned at these times, you know, because I got a guy, just for example, one of my students have been a young guy, so I was kind of monitoring him closely and helping him out. And he started out with a $6,000 account, and in 3 months ran it up to $33,000. You know, trade 1 lots. Wow. That's pretty good. That's $9,000 a month. That's better than working at Walmart, you know?
Yeah.
Welcome to Walmart.
I heard he trades from Walmart.
There you go.
So he has a secondary source of income.
Okay. Welcome to Walmart, right?
Yeah.
All right, so here you go. Here you got 9:42 a.m. That's 9:55 a.m. And there's our full moon this morning, 1 hour from now, roughly a little more one hour from now at 10:20 a.m. Then we have 11:45. We have a 12:01 p.m. We have a 12:29 p.m., 12:53 p.m., a 2:34 p.m., and a 3:38 p.m. Write these down. It's a busy day. This is probably above normal, the average number of times I have per day. You know, usually I'd say the average is usually about 6 or 7, and this is 9, right? So check these out.
What do the source numbers mean? That it's a confluence of events. When you have two, you have,
That's so I'll know where, if I want to go back and check these, or if I follow up with somebody, I'll know where to look. They're all on the, they all come from the same page, just a matter of where on the page you look, you know, so it makes it.
oh, I see. So that's the page, the source.
No, it's all, everything comes from the same page.
Okay.
It's just where on the page, that's all. It makes life a little simpler, that's all. But speaking of simple, trading can't get any easier than this. I could teach a grade school kid to do this. All you got to do is, if the market declines into one of these times, you look to buy it within a couple of minutes. If it goes up into one of these times, you look to sell it within a couple of minutes and use a two-handle stop loss. I think my experience is this works about 75% of the time.
Okay.
Can it get any easier, Dale? I don't know. If you got some way to make this simpler, I don't know how to do that.
Three drive,
You know?
three drive formation.
What's that? Okay.
JRL 3 drives.
Okay. Well, then you got to count three.
Many ways to skin a cat, man.
Then you got to count 3 drives. You don't even have to count anything here. You don't have don't need any moving averages. Don't need any oscillators. You don't need to count any waves or recount any waves.
Yeah.
You know?
You just need a good clock.
That's it.
Yeah.
You probably got a clock on your.
Know where the big hand and the little hand are.
You don't even have to do that anymore. They got digital clocks on your computer, so they'll spell it out for you. Okay.
Yeah, that's how you know how they used to tell time at the Michael Jackson estate.
Okay, I'll play along.
When it was bedtime, when the big hand was on the little hand.
Okay, there you go. I'll give you the rim shot there. You know,
I like it. Yeah, Benny Youngman.
There you go. Okay.
All right. So, are you trading this? Are you that active? Because you're kind of, you know.
I made my living doing this for many, many years. I went on the floor when I was on the CBOE. This is what I did.
Are the times the same now as they used to be?
Yeah, nothing's changed. Listen, Dale, there's a book out there called Non-Random Walk Down Wall Street, which refutes the whole idea that the market is random. It's an MIT professor, and he talks about how the Mesopotamians and the Babylonians were trading on the moon.
Okay.
Thousands of years ago. Nothing has changed. Human nature has not changed. Until human nature changes, this stuff will continue to work. Okay.
Nothing new under the sun.
This stuff is better than all the algorithms in Wall Street. Take all your PhDs and all your computers in Wall Street, pile them up as high as you want. There's no way they're going to be as good as what I have, because this is based on nature. All their formulas and stuff are trying to replicate what I'm doing. They just don't know it. It's all based on what human nature does, on human psychology. We're a part of nature. We're a part of this universe. We're a part of the solar system. Okay?
Yeah.
Nature is genius. That's where the genius lies. I don't have to be smart. I just have to listen to the genius, which is nature, which is the solar system.
Okay.
Okay?
All right, so guys, write these down.
Hopefully everybody. What's that again?
Screenshot.
I'm sorry, I didn't catch that.
I told everyone to take a screenshot so they have the times. Yeah.
Hopefully everybody had enough time to write those times down, and if it doesn't work within 5 minutes, either don't do it, or if you did a demo trade or something, get out. Right? That's that simple.
Okay, usually that's your other parameter. You give it 5 minutes.
Usually these work within
5 minutes and two handles, whichever comes first.
Exactly.
Or profit. Okay.
Now what I'd recommend is, if a trade starts going your way, just put a little trend line under if you're going up, you put a little trend line under the bottoms. If you break the trend line, you get out. Going down, put a little trend line on the tops. You break the trend line, get out. That's it. It can again. Well, you're going to come up with something, but I'd like to say I don't think it can get any use to you.
Yeah, it's the first time you've shown this. During
I might have done it once before.
Oh, really?
All right, coming up here now on page 2, we have what's coming up in the bigger picture. So I went back a couple of days so we could kind of get the background here. And I had a thing for last week for, look at that. Jupiter is the planet of expansion, and Neptune is the planet of oil. Neptune is oil. What happened last week? All of a sudden, oil, after going up for weeks and weeks and weeks, finally broke, right?
Yeah.
Because we got more oil all of a sudden, There you go. So now the point is, I'm leading up to the full moon here. So these markets that look like they're on big trends now have just turned recently. The full moon might give us a little head fake, everybody might say, oh, that oil's going way down now. Well, I would, I'd be careful, because these full moons, I don't know if any of your folks, when I come on here every couple months, if they go and take the 10 minutes it takes to go check the markets with these full moons and new moons, it's very simple, and find out that this stuff works really well. So anyway, here's what we're going to be looking at. We're going to be taking a look at cocoa. We're going to look at hogs. We're going to look at oil. We're going to look at stocks. We're going to look at T-bonds. Let's see, what else do I have on my shopping list here? There we go. We got going to take a quick look at grains, a couple of grains, and got gold and so forth, right? So here we go. Here's your cocoa. As you can see, cocoa has been coming down, down, down.
One of my associates said Neptune is oil rather than Jupiter.
That's what I just said.
Oh, you said it. Oh, okay.
I said Neptune is oil.
Okay.
Well, you got somebody there who does this?
He does harmonics, and he's a very esoteric, snappy dresser from Portugal. Very talented guy. He caught the crude on the downside.
All right. I would love it if he gave me a call or something,
Okay.
All right. So I love the compare notes or something,
Yeah.
All right, so the cocoa topped out there. It had been going up, 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 up all the way till late April, topped out, and now we're coming down, down, down. I think we're coming down to support, and we got a full moon coming up right now in an hour. So watch out for a possible turn for that, for the cocoa here in the next. The full moon doesn't work. Some of these times I gave you intraday times, which worked within a few minutes. The full moon is kind of the exception to the rule, and then usually, well, maybe it worked for the stock market, but usually doesn't work for most markets to the minute. Usually it's within 1 day. Okay.
Right.
So by tomorrow, you should be, if these things are going to reverse, they should reverse by tomorrow. If they don't, you get out,
Okay. So the cocoa, if you bought it, the last bar is what, yesterday's bar or today?
All my charts are as of last night.
Okay, so I don't know what cocoa's doing today, but you expect a reversal between today and tomorrow.
You can see my green support lines there, so maybe down 50 points, not more than 100 points lower.
Yeah,
we should find us some support. Obviously, if you just look, if you read a chart, that you start taking out these support levels here, then you got the elevator is going to be on express going down, for several levels, right?
Right.
So this is it.
Okay.
Okay, so let's go move ahead now. Here's your hogs. Now here's an example of a market that I would not want to do because it's in the middle of the channel. We're looking for markets that are at an extreme. The cocoa is near an extreme. It's near the bottom of its channel. That's what we're looking for, and that's where you're going to get your reversals. It's Newton's law. Maybe if you remember your high school physics, for every action, there's a opposite equal reaction. So we're looking for a market that's had a big move, and now we're looking for it to possibly reverse. But if it's in the middle of the channel, the hogs can't decide whether they want to go to their trough, a little hog humor there, Dale, or go to the top of the hog house there or whatever. So they are playing around in the middle, So that's a good example of the kind of thing you want to avoid. If there's for some reason the hogs had a little mini panic here and got to the bottom of their channel today, then maybe we'd consider it.
Okay. Well, the crude is extreme. It lost close to 10% in a week.
There you go. So now we're coming down to what I think is probably some kind of support level, either here or here. And I would say that if this is going to reverse, it's going to have some kind of bounce or something. It's probably going to do that in the next maybe 24 hours,
Yeah, starting.
Okay. T-bonds are kind of interesting because I think, is there anybody in the world who has not been bearish on T-bonds? After all, the Federal Reserve has told us that interest rates are going up, right?
Yeah, we weren't bearish. We were looking for this
All right. Well,
recent
anyway,
rally. So are you saying that the bond rally could peak too within 24 hours?
But but
Okay.
shorter. But looking back here, what's interesting is this did the unthinkable. Bonds took out their little downtrend here. Now they're popping
Yeah.
up here. But now I think we're up to a resistance level here. I think
At
we
least
could get
for a trade.
I think we can get a little short-term top here. Does that go along with you, Dale?
Could be. Yeah.
Okay. Here's your dollar. You asked me about the dollar. Like to see the dollar get a little bit higher before we top out, maybe 95 and change.
We did that. We went to 95 today.
All right. Well, that's while I was sleeping, probably.
Yeah. And
it's come off.
It's come off 32 points. So
there you go. So maybe we hit my red line there. How high did it get? 95 and 30.
95 even, I believe.
All right. Well, there you see my red line there was slightly above 95, I think.
Yeah. Let's see.
And so that's the kind of thing we're looking for.
95.03. Last 94.68.
Yeah. What was the high? 95 what?
03.
03. Okay. Here's your gold. Gold is not real thrilling. It's been kind of sick lately, as you know. And now we've kind of rallied to the top of this down channel. So if you're going to do anything, you probably ought to sell it against these tops here. Did we take out these highs
No.
This morning? All right. Well, there you go. If you take out that top, then it's a whole different ball game, But until we do, the trend is down. Okay, and we got a full moon right now. And this gold is often been known to turn on the full moon, new moons. Here's early April. I think that was a turn right there. Right, I think that was a full moon there. I think there was a new moon in the middle of the month, somewhere around there. So forth,
Okay.
Here's your grains. Hey, folks, if you don't want to use your brains, trade the grains. They love the moon. They love the dance to the moon. They dance to the moon more than Fred and Ginger dance to Hollywood musicals,
Moon Dance. Van Morrison.
Van Morrison, or
Yeah.
John Travolta in Saturday Night Fever, right? Whatever you want to use, right? Anyway, so there's your corn near the top of the channel there. So it looks like corn could be making a short-term top here. I think longer term, probably corn's probably going higher, but I think we get a short-term top here in the next day or maybe today, or by tomorrow. Here's your beans, kind of the same situation, right up against this downtrend line here. It's do or die for beans in the short term,
Yeah.
Here's your coffee in a big triangle, big wedgie. There you go. And up against the top of the wedgie there. It's probably going to resolve and break out one way or the other here in the next day or so.
Okay.
And I can not going to go through here without sprinkling in a little foreign currency for you, Dale, right?
Okay.
That's what bros are for, right? So there we go. Yeah. June Japanese yen. I'm doing futures, so it's probably upside down to what you folks are used to looking at.
Right.
But there you go. So we went down, then we got a bounce. Looks like we could be topping out. By the way, these currencies, if you go back and take 10 minutes to get yourself, you can Google a lunar calendar. It's all free, and it'll take you a few minutes of your time, and it probably will turn out to be the most lucrative 10 minutes of your life. If you go back and look at these currencies and look at the new moon and full moon. And here we go. We're right on a full moon, and the yen has been going up. And we'll bounce here. It looks like this thing could roll over here and go back to the downtrend. What do you think on that? You're the currency expert, Dale.
On the yen?
Yeah.
Yeah, I'd be looking to sell this bounce.
Okay, there you go. There's an old top right there, and we're getting up close to that. You see, obviously, if you break out over that, then it's a whole different ball game, right? There we go. And now we've gone through all my charts, and I gave you all the magic times. Let me make sure everybody got the magic times I had here for these. Let's see, we got today is a full moon. We have after the close of the day, we had some things: cocoa, coffee, hogs, oil, stocks, and 2 pounds. I think I covered it all. And I don't think we took very long, right?
No, good job, Norm.
And what's that?
Good job.
Thank you. And here's how you learn more about this and get a free, if you qualify. In other words, I have certain qualifications because I don't want to waste people's time if they learn this and love this stuff. you got to be able to follow through. You need to have a little bit of money to trade with. That would be good, and maybe have a little bit of experience, so I don't have to explain what a futures contract is and that kind of thing. But if you're past that level and you can speak English, then I'd like to help you with a free class and a free subscription, 1-month subscription, and a free class to go through my letter and show you all the different forecasting methods I use. I use Astro. That's what Mr. Gann, any of your folks know about Mr. Gann. W.D. Gann, probably considered the greatest market technician of the 20th century. He was really using astrology. He just didn't tell people very much about that, and so that's what I'm going to do. I'm going to tell you what Gann wanted to keep secret, because that was his #1 tool, So anyway, I'm going to teach you that, and then we got also do advanced Fibonacci, and I do fractal models and all the stuff, and I got 50 years of experience. I started studying the markets when I was a teenager. I'm 67 now. I was on the floor in Chicago on the SIBO for 12 years. Also did a stint at the Board of Trade, and so I got a little bit of experience, and so looking forward to sharing my 50 years of market experience with some of you folks. Hopefully help you improve your market timing, and so contact me right away. Okay, so I can get you in line. I almost got June almost all booked. The classes are individual, 101, personalized based on your level of experience and knowledge. So there you go.
Thank you so much, buddy.
You betcha. And it's all, Dale, it's all free. And if you mention mention Dale, it's with a money back guarantee.
Yeah.
A little joke there, Dale.
Yeah. All right. Well, thank you, Norman. We'll be monitoring it. And I bet there are some people that took screenshots of times to trade S&Ps, which handle stuff. And
please feel free to call me tonight or tomorrow and say, Norm, that was brilliant, or you're an idiot, or whatever you
yeah, he could
and
take
we'll
it.
go over these. Yeah,
right,
we'll go over these times. If they're good, they're good, and if they're not so good, and you know what? This stuff is all empirical, objective information. There's very little room for interpretation here. So that's it. Either it works or it doesn't work.
Yeah, be a machine.
Okay.
Thank you, Norm.
That's it. All you got to do this, all you got to do is be a good robot. That's it.
Yeah.
Buy on the weakness, sell on the street. Use a stop.
All right. Well, I encourage people to give Norm a call. This kind of knowledge is disappearing. Everyone's doing algos and black. Everyone has an algo to trade. So
this is better.
If you want some, learn some things that have been used all the way back to Daniel in the Old Testament, Norm's a great guy to learn from. He's a very patient teacher. So I encourage you at the minimum to give him a call. So thanks so much for your time, Norm. I was anticipating perhaps a dollar turn based on what I've learned from you. So I appreciate it.
Very good, sir. Thank you very much for having me on your show. Looking forward to helping some of your folks.
Okay, buddy. So that's a wrap.
Everybody have a great day.
Give Norm a call. That's a wrap for us, everyone. Oh, Dale, can you ask Norm if his program works for people with day jobs or day traders only? You still there, Norm?
Yes, sir.
Does your program work for people with day jobs or day traders only?
The market doesn't care what you do. You can do it. You can do it during the day or not. Or if you want, I can put you in a learning mode where I can show you. I'm gonna show you the secret behind these times, where they're coming from. And if you got a regular job during the day, then you can review these every night, and see if they're working or not. And after a while, you might decide to quit your day job and do this, because you might be making more money doing this,
Okay, Norm.
Does that answer the question?
Yeah, and if it hasn't, give Norm a call, and Norm will spend time with you. Okay, guys.
Everybody have a great day.
All right, see you, Face. Good hunting. We'll see if we're going to get this dollar peak in the next couple days or so.
I'd only give it 1 day.
Norm would only give it 1 day, so we're off a little bit today. Maybe they'll challenge that high one more time, but starting to fade pretty good here. The only thing that bothers me on the 1 hour is the confirmed high up here, but it wasn't doing it on the 4. or just barely confirmed. Okay, everyone, I'll see you guys tomorrow. Good hunting. Don't just count your pips, count your blessings, and we'll enjoy the full moon. Go outside with your husband or wife or boyfriend and girlfriend and look for the moon in the sky, and just say to them, fly me to the moon and let me dance among the stars. Oh, you didn't like that, huh, Stel? All right, I'll see you guys tomorrow. I get a little Meshuggah on full moons.
There you go.
See you guys. All right. Thanks, Norm.
You bet.